You were here, hot on the heels of the first tech IPO of 2017, and while you got on the plane, no more. I mean, how often does this happen?
This soon, or this close to listing day, almost never. I mean, it was supposed to price tonight. Tonight at 5 o'clock Eastern was supposed to be that pricing call to decide what the market value was going to be. And, you know, Cisco did come in at a valuation, $3.7 billion. It's a lot higher than the $1.7 billion, which was the high end of the market value they were going for. But this is not a common occurrence. We saw Blue Coat last year get bought by Symantec, but they weren't on the road yet. This company, AppDynamics, had done all of their meetings. They had done their road shows. Investors were excited, and I guess Cisco was more excited and willing to pull the trigger on a buyout.
And Todson, could this become a theme? Could road shows just make it all the more hot for bigger tech companies, rivals, to buy in and take them off the market?
Yeah, well, I mean, certainly, presciently, we mentioned in our report this year that this coming year, there's a lot of companies in the IPO pipeline. There's 30 or 40 companies that we're expecting have a good chance to come out this year. But we purposely used the language that they will have an exit this year. That doesn't necessarily mean they'll have an IPO, but they will have an exit. And I think a lot of those companies, especially if you get into the mid-range of the valuation group, not the big names that you see, but the next tier down, I think a lot of those companies are absolutely willing to do a dual track and see what their options are.
If we stick with one track and the IPO track, I know there's one man out there who's rather hoping that this doesn't become a theme. And we did speak to Tom Farley, the president of NYSE earlier. Have a listen.
We're expecting 10 IPOs in the next 3 weeks, including 4 on Friday. 3 operating company IPOs and a closed-end fund. And by the way, those 10 IPOs, they're really big IPOs.
Alex, this must have got bankers concerned.
It does. And the IPOs, the deals that Tom is talking about, those are a lot of big sponsor-backed companies outside of tech that we've been waiting to see for a while. Laureate, Geldwen, an education company, a window and door maker. They're kind of clearing out
stuff.
Exactly. They're clearing out the pipeline because last year was so choppy in equities, and now we have this Trump rally, and so people are taking advantage of it. It's a different story with some of these growthier tech companies. Yeah. What I'm hearing is the investors really, really want into them. They really want to buy into them, but there's no supply, and there's still no supply. We've heard about all of these companies going public, but it'll be interesting to see who does kind of test the waters next. Our sources tell us MuleSoft could be one of the next ones that goes in the next few months here. So all of these smaller names, but you know, to your point, they are also the ones that when the strategics finally feel like they're willing to write the checks that that make the valuations that they raised in their last private rounds, these are the same kind of enterprise companies that we might see get bought out by the likes of Cisco.
I agree. And I mean, if you look at last year, again, it was a record year after a record year. But there was something really interesting about that record last year. A lot of the big name technology companies weren't the ones who were doing the buying. I mean,
nothing from Facebook, nothing from
right.
Amazon.
I mean, you go off all the traditional serial acquirers, they weren't actually buying.
So the pool is becoming wider.
And yet they've got the funds to do it. They are interested, and they see a lot of these companies bringing disruptive technologies. You're looking at cloud, you're looking at AI, especially with an AI machine and deep learning. Those are attractive assets that are disrupting every industry. And so it's not even just the Ciscos or the HPs, et cetera, of the world. It could be the Walmarts, it could be the Ford, it could be the P&G being an acquirer of these companies as well.
And Todson, how much do you think perhaps the carrot of Donald Trump's potentially repatriation of cash, is that something that could make the cash load in the pockets of the likes of Cisco's feel even heavier?
Yeah, absolutely. I mean, if I think of what are the potential positives and negatives of the new administration, I think the two negatives are potential higher regulatory review, and so that could be tougher for bigger deals. I think it's also potentially tougher for inbound deals. And then the other potential negative is this growing interest rate, and does that make it harder, especially for some of the private equity funds, to borrow money to do deals? But I mean, on the backside, I think cash repatriation coming in, I think the IPO market opening up and all these companies getting ready to do an exit of some sort. And you know, many people look at the immigration as a bad thing in terms of H-1B visas, et cetera. If that really does become a problem, I think that also spurs acqui-hires, because you've got to find those people somewhere, and that could be you're acquiring them instead of bringing them in.